Initiation in the Payment Life Cycle by Prashant Patel of Banking Payments Academy. Many people assume that when a customer clicks Send Money, the bank immediately transfers the money to another bank. But that's not how it actually works. What is payment initiation? Payment initiation is the first step in the payment life cycle, where a customer instructs their bank to transfer money to another account. Example: open banking app/corporate system. Enter beneficiary details. Click Send. At that moment, payment initiation happens. Does the bank immediately send the payment? Short answer, no. Banks first process the request through multiple internal systems that perform validations, compliance checks, and transaction processing before sending the payment to a network. These systems are typically part of the core banking application, CBA. What is a core banking application? A core banking system manages key banking operations such as customer accounts, transaction processing, payment validations, ledger updates, integration with payment networks. Examples: Finacle, Temenos, T24, Oracle FlexCube, GPP. Think of it as the processing engine between the customer and the payment network. What happens inside the bank after payment initiation? Step 1. Receive payment instruction requests come from channels like mobile banking, internet banking, APIs, or corporate payment files, often in ISO 20022 pane.001 format. Step 2. Validation checks. Before processing the payment, the system performs several checks: account/IBAN validation, beneficiary verification, currency and limit checks, duplicate detection. Step 3. Balance check. The system verifies available funds. If balance is insufficient, then payment is rejected. Condition: account balance greater than or equal to payment amount. Who initiates? Customer, retail/corporate. Merchant, for business payments. What happens here? Customer logs into banking channel, mobile/internet/branch, enters payment details. Bank performs KYC verification, already done during account opening, AML/sanctions screening. Strong authentication, 2FA OTP biometrics. Bank authorizes the transaction. At this point, the payment is validated but money has not yet moved. Step 4. Compliance screening. Payments must pass through compliance controls, sanctions screening, AML checks, fraud detection. Authentication, 2FA2, PAOAUTH2. Cryptography authorization. Authorization by payer bank, debtor FI monitoring and controls, SLA monitoring, exception handling, reporting, auditing, SEPA cross-border regulations. Step 5. Message transformation. Once the payment is validated, the system converts the message into an interbank payment message. Customer message arrow pane.001. Interbank message arrow packs.008. Step 6. Send to payment network. Payment is routed through networks like SWIFT, SEPA, SEPA Instant, Target, domestic clearing systems. This is the brain of the bank's payment system. What does it do? Validates transaction format, checks available balance, applies fraud and risk rules, chooses the correct payment route, SEPA SWIFT domestic clearing, instant payment system. After this step, the payment is routed to the correct clearing system. Step 7. Account update, customer account after processing. Customer account is debited, ledger is updated, confirmation is sent. Message flows, payment, cash, corporate, exceptions, clearing and settlement. Central bank's transaction processing includes clearing, bilateral/multilateral netting, settlement, RTGS DNS, Information Exchange Settlement Systems, RTGS, Real-Time Gross Settlement, DNS, Deferred Net Settlement, CSM, Clearing and Settlement Mechanisms, facilitates clearing and settlement between banks. Connected to central banks, clearing determines which bank should pay how much. To which bank? Types of clearing: bilateral, between two banks; multilateral netting, multiple banks, net position calculated. Example: Bank A owes Bank B €1 million. Bank B owes Bank A €800,000. Final net settlement equals €200,000. No actual money moves yet. Only obligations are calculated. SWIFT is a messaging network, not a bank. Used when payment is outside SEPA region cross-border or foreign currency payments. Key components: SWIFT MT/MX, ISO 20022 message formats. Correspondent banking Nostro/Vostro accounts, SWIFT GPI for tracking flow. Bank sends SWIFT message. Correspondent banks process settlement via Nostro/Vostro accounts. Beneficiary bank credits. Customer SWIFT sends instructions. Money moves through bank accounts. CPA schemes, SEPA credit transfer, SCT, SEPA instant credit transfer, SCT Insta, SEPA direct debit, SDD core, B2BR messages, reject return. Key takeaway: the core banking application acts as the central processing hub between the customer and the payment network.